You're welcome to the Forex Trading and Lifestyle Entrepreneurship channel. Do take a minute to pause this video and read this disclaimer. Hi, it's Victor here from foreshowmarkets.com. Today we'll be looking at what are the factors that affect the interest rates. Okay, indirectly they are the same factors that affect the economy, good or bad. They are the same factors that affect the exchange rate of a country's currency. Okay, so that's what we'll be looking at today. So I'm saying all of this from the top of my head. I don't have any materials prepared. Okay, this is something I've been doing for years, and it's out of passion. Okay, so I'm trying to get the concepts clear in my head. So we're looking at factors that affect interest rates. So let's make it pictorial so we get the concept clearly. Okay, these factors that affect interest rate are the same factors that affect the economy. Okay, and of course, if it's affecting the economy, it affects the exchange rate. So exchange rate is the strength of the currency. So that currency either goes stronger or weaker. Okay, now the interest rate reacts to the economy. Okay, the interest rate reacts to the economy. The exchange rate reacts to the economy. Okay, the interest rate reacts to the economy if it's good or bad. Okay, the exchange rate reacts to the economy if it is good or bad. Okay, so what are the factors that affect either of this? And that's what we'll be looking at, and those are the economic data, news and economic data. Okay, so the factors that affect these are what? News and economic data. Okay, so let's go back here. So let's see how these factors affect economic data. I'll just do a summary. Example, let me see, on unemployment. Okay, how do you know that the Nigerian economy is doing badly? How do you know that the Nigerian economy, or how do you connect the state of the Nigerian economy with the value of our currency right now? Is our employment rising or falling? So example number one is unemployment. Is our unemployment rising or falling? When unemployment is rising, it means the economy is doing badly. But when unemployment is dropping, it means the economy is doing well. So I'll put that question to you. If you're in Nigeria and watching this video, is unemployment in our country going higher or going lower? And all you need to do is answer that question is to look at your exchange rate. Okay, the reason why the exchange rate has been falling and the naira has been growing weaker is because one of the reasons, not just the reason, one of the reasons is unemployment. Okay, so as a fundamental analyst, you need to track the unemployment numbers. They come out for the US and Euro and UK and all of that. They come out weekly, and then the main one comes out once a month. Okay, you need to track that. So very, very simple connection. So if the employment is getting bad, okay, and all other data is getting bad, expect this interest rate expect this interest rate to be cut. Okay, expect this interest rate to cut, but traders will not wait for that interest rate to be cut before they even start selling. Good fundamental analysts, once they see that all the data are not falling in place, they already expect the interest rate to be cut and they start selling against that currency. Okay, waiting for the interest rate date, and when the interest rate is released, they should already be before the interest rate is released, they should already be in profit. And then once the interest rate is released and it confirms their position or their speculation, then they even make more profits. Okay, so that is how it works. That is how I operate in terms of fundamental analysis. You need to analyze the factors that affect the economy and then the interest rate. We have GDP. Okay, you don't need to be an economist or a finance guru to do fundamental analysis. GDP, you can Google what it means, gross domestic product. It is also a measure of the strength of the economy. Okay, and so when the GDP numbers are good, consistently good, you see the economy, the economy, it means the economy is doing well, and you see the currency being strengthened. And if the GDP is doing badly, you see the economy, it's a sign that the economy is shaky, and you see the currency going weaker. All right, so that's GDP. Let's see retail sales. Retail sales. So retail sales simply refers to the people's buying power. Are people buying stuff from retail stores and retail shops and all of that? Okay, I don't know if it is possible to keep this kind of data in Nigeria. I don't really know, but I know that in the US, the UK, and the developed countries, all of this data are collected and collated and are properly released, and you can rely on them. There's an argument that data here is not reliable. I don't know, but definitely one of the reasons why I don't trade in the Nigerian stock market, first of all, is because the economy is bad. And so if the economy is bad, you don't expect the Nigerian stocks to even do so well. Okay, so retail sales, if the retail stores are selling more, it's a sign that there's money in the system. It's a sign that people are making money, people are earning money, and so they can buy more stuff. Okay, and if they are buying more stuff, it means the economy, it's going to filter into the economy. More money is in the system, more people are making money. It directly makes the economy grow stronger. But if retail sales are dropping or are very, very low, it means there's no money in the system. People do not have money to buy. People can only buy stuff when they have money. Okay, and you can directly see that in the volume of stuff they are buying. Okay, so as a trader, you're tracking retail. As an analyst, you're tracking the retail sales numbers as well. Okay, then let me just do the last one. Industrial production. There's one for factory. Okay, industrial production. Okay, so I'll directly relate this to our factories. Okay, for example, in Nigeria, we're one of the biggest producers of crude oil, but no single refinery is working. Why won't your currency be weak? Okay, no single refinery is working. So if you have factories and your factories are not working, right, the money that's supposed to be coming to the Nigerian economy, all of that money is going out of the Nigerian economy, is going to another country, right? So money that is supposed to be building our own economy is going out of the country. And of course, those are the countries that will be growing, okay, growing better, and their currency is doing better, while ours will be suffering. Okay, so if your factories are not producing optimally, or if your factories are not working, example, one of the things that affects producers in Nigeria is power. Okay, so if half of your profit is going into power, okay, it simply means that the amount of money you can make is less. Okay, so if basically overall if factories are doing well, industrial production is booming, it directly filters into the economy, money goes into the system, people make money, families can afford to pay their children's school fees, families can afford to pay their rent and all of that. But when the factories are not at optimal capacity or are not working at all, it directly affects the economy in terms of salaries, wages, families and all of that. Okay, so what you need to do in summary as a fundamental analyst is track all of these numbers. Okay, track all of these numbers, especially the high impact numbers on forex factory for each of the currencies. Okay, if they are all looking bad, okay, you will start hearing the central bank governors, the reps talking, about reducing, just talking about how they need to act to stimulate the economy and all of that. So those are the things you need to be listening out for. Okay. Another thing you need to watch out for are the communications from officials, from government officials. Okay. In the US, you want to be listening to Donald Trump. You want to be listening to the Treasury, the head of Treasury, or what's his name? The Fed president. What's his name again? Mnuchin. No, it's not Mnuchin. What's his name again? I forgot him. The head of the Feds. You need to be listening to him. Okay. So such people for each of the countries. UK, you need to be listening to the central bank governor. Listening to what they're saying. In the US also, you need to be listening to the members of the Federal Open Market Committee. Okay, there are many of them. You need to listen to what they are saying. From what they are saying, because when they want to change interest rates, they vote. Okay, and the interest rates are raised according to the number of votes. So you need to see or listen to these guys' positions on interest rates before the interest rate day and make your conclusions. Okay, that's the basic secret, my basic secret of fundamental analysis. Okay, you get all of this data, and then tie it into interest rates. Okay, if they are serially good, expect the interest rate to go up. If they are serially bad, expect the interest rates to drop. Okay, monitor world events. Example, monitor world events. Example, the coronavirus pandemic right now. Nobody can think of increasing interest rate in the next 1 year or 2 years. Okay? Take that from me. Nobody can think of increasing interest rates in the next 1 year or 2 years. That is pure fundamental analysis. Okay, and you can apply it. I'm already applying that to my trading. Okay, rather expect the central banks to cut interest rates, and sometimes even go into negative interest rates. So listen to world events, stories of war or tension between countries. You've heard tensions between Donald Trump and China, different people. Crude oil, anything that's related to crude oil, follow these proceedings and basically find out how all of these events connect to interest rate. Okay, in the course of my videos, once I finish the course, in the course of my videos, I'll be going deeper into each of these items, fundamental analysis, and it will be to our benefit. Okay, so that's my key secret, okay, of fundamental analysis. Follow each of these data and then find how they affect the interest rate, and you've gotten the key. Okay, it's as simple as that. And so that's why you will see on the chart that you are repeatedly seeing bad news, but the price is still going up. It's because people are already pricing in interest rate stuff and all of that. Okay, example, this period the US economy is doing badly. Okay, but honestly the US dollar and the US economy is still one of the best, if not the US economy is the best of the major economies. So even if things in the US are bad now, people are still buying the dollar because it's kind of a safe haven. So these are things that you need to understand about the market. One video, 4 videos will not be enough for me to share everything I know about fundamental analysis. Okay, so just keep following my videos and keep learning, and of course you're going to get good at this. Thank you so much for watching my videos. If you have been watching our videos, thank you so much for watching our videos. Okay, make sure you give this video a thumbs up, and also if you are watching this video for the first time, make sure you click the subscribe button, click the bell beside the subscribe button, and click all notifications so that you can get notified whenever I upload a new video. Have a wonderful day. I can tell you I've enjoyed myself sharing all about fundamental analysis. I'll see you in the next video. Also, if you're watching my videos, if you're based in Lagos, if you're based in Nigeria, basically, when the lockdown is over, I'll be running workshops, 4-day workshop at the FXTM office at Allen Ikeja. If you are not in Lagos, expect me to be coming to a city near you, Port Harcourt, Abuja, and we'll be holding workshops in a city near you, so you could plan to attend any of our events close to you. Thank you so much for watching. I'll see you in the next video. Cheers.